forward. Gautam Baid, equity advisor, Complete Circle Stellar Wealth PMS, is joining us now to discuss market fundamentals and this big update that came by the long weekend as well. Gautam, good morning. Thank you so much for joining in. First up, your thoughts. Do you think this proposed cut first could go through? And secondly, what kind of demand improvement would you see? Which sectors, according to you, would be benefiting the most?
Sonal and Hormuz, thank you for having me on your show. Well, the market is already showing its verdict in the form of price action today. We can clearly see that autos and consumer discretionary are poised to become the biggest beneficiaries of this GST rate cuts if they do come through and approved by the GST committee later this year. So let's wait and watch for the approvals to come through. But for now, I think the market is pretty excited. This should definitely boost domestic demand. And along with the income tax cuts in the budget and the RBI being very accommodating, I think the macro setup is broadly in place for a very durable rally from here. And I think the market has discounted the worst of the tariff tantrum. And I think over the next few months, as the noise around these tariffs and trade wars settle down, the market should become more broader, because if you see the pattern of the market over the last 12 months, it has been very narrow and selective. And the focus for the last 12 months and even going forward should be on stocks with earnings growth visibility for the next 2 to 3 years, preferably those that are more domestic facing in nature. And this is a time to be a risk manager with a focus on portfolio construction. Now, what do I mean by that? It means that your portfolio should be balanced across industries and risk factors and avoid single factor risk. Do not go overly overboard on any one single stock or sector, because the pace of change around the world and in India as well, driven by AI and the rapid geopolitical shifts, is pretty stark. So be on the alert every day for any fundamental change taking place in your individual businesses and the underlying industries.
Gautam, good morning. Thank you for joining in. A sector, we've spoken of autos and consumer durables, but one sector that is slowly creeping its way into this potential GST rate cut is insurance. And how do you view this as a positive for the sector? Because despite a slew of measures being taken within the space, it continues to remain an underpenetrated sector for a country as large as India. Do you believe that this could be a near-term kicker for a sector like this, for especially because it is set to have a long-term growth runway?
Well, almost that has been a long-standing demand of the insurance industry, both life and non-life, for a GST rate cut, and hopefully it will come through. Because as you rightly mentioned, the penetration in India is still pretty low, and even today, insurance is primarily more of a push product rather than a demand pull product. So I think hopefully, if the premiums come down, then demand should definitely pick up. But within this industry, again, not a stock recommendation, but we have discussed this stock in the past, MediAssist Healthcare, and there basically, instead of choosing one single insurance player, you can choose a third-party administrator, which basically caters to all the players in the industry and which has got a durable competitive advantage in this particular space.
Okay. Gautam, one sector which is not doing so well today in a very strong market like this is IT. Actually, it's the only space which is in the red today. What's your take? We've seen a lot, Q1 earnings and the layoffs that TCS announced. Do you think this year could continue to disappoint? What are some of the triggers that market is watching out for when it comes to the IT space?
Well, in the IT space, Sonal, I think there's a structural downturn in place because of AI. If you look at the IT space in India, you have to segregate it into two parts. One is the IT services, which have basically not spent any money on innovation as such in the last decade or two, and they are the ones who are being disrupted big time by AI. On the other hand, you have got the IT product companies. They are the ones basically who will be more agile and more able to adapt to the changing environment. And that is why you're seeing a stark differentiation within the IT space. IT services like TCS, Infosys, Wipro are underperforming, whereas the product companies are basically finding favor with investors. So this is a space in which you have to be very, very selective, and the pace of change here is only picking up. So I think, you really have to do a lot of bottom-up stock picking in this particular space.
Gautam, we've spoken about a lot of these FMCG names and so on, but I would specifically single out the cigarette-oriented names because this is one space where there is talk of the sin tax being increased into the 40% bracket. But regardless of the changes that have happened to the tax slabs in the past as well, the cigarette volume growth has continued to remain as is. So, this may be, do you see this only as a sentiment negative? Because at the end of the day, the volume growth has had no impact whatsoever, regardless of the tax structure that these cigarette companies have had.
Well, almost in this particular space of in the tobacco industry, it has been the demand has been pretty inelastic in response to price increases in the past. Even for the last many years, we used to see a sell-off in these tobacco stocks just ahead of the annual budget. But as soon as the budget passed, basically these stocks used to go back to their all-time highs. For in the most recent quarter, a few stocks like Godfrey Phillips have reported very strong numbers. And if they sell off because of bad sentiment around the sin stocks category, that could be used as an opportunity to accumulate for long-term investors. We do not have any exposure to the tobacco stocks in our PMS portfolios, but this is just one of the ways to approach this particular industry stocks.
Okay. Gautam, I wanted your take generally on the markets overall. We have been seeing these uncertainties around US-India trade tariffs. There's a lot with respect to consumption as well, which the GST proposed cuts would try to address overall. What about earnings as well? What's your take? What happens in FY26, FY27 with respect to market moves? Any specific sector do you think would outperform the majority of other spaces?
I think definitely the domestic-facing industries and domestic-facing sectors will find more favor from investors, both domestic and global, from here until the tariff situation is resolved. However, because of this tariff uncertainty, the export-driven sectors, excluding the categories which are exempt, for example, pharmaceuticals is exempt right now, so the stock price impact there has been limited. But in industries like textiles, gems and jewelry, where there is a big sell-off taking place because of this tariff news, if they come down to very attractive valuation levels, be on the lookout to basically evaluate them as and when the tariff overhang gets removed. Because if the tariffs get normalized and come down to a more rational level of suppose 15% or so, then you can see a big re-rating in many of the names right now which are underperforming. So have your watch list ready, do the research, and keep the names handy, because as and when the tariffs come back to a low level, if they do, then these names are primed for a comeback.
Indeed, Gautam, pleasure having you as always. Thank you so much for sparing time and joining us today. Looking forward to have you more often on the platform. Gautam Baid of Complete Circle Wealth. By the way, the index has cooled off slightly from the highs, around still 325 points higher, so no complaints there whatsoever. Still at 24,960 is where the Nifty stands. Take a short break. On the other side, put the spotlight on the crypto market. Manisha Gupta joins in on the other side.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.